Most retail traders lose money consistently, but it's not because they're stupid. It's because they've been taught the wrong way. In this video, I'll show you the difference between how retail traders think and how smart money actually moves the market. You will see how institutions manipulate price, and I'll show you how to trade exactly like them. So let's dive in. Let's start with the mindset, the foundation of every trade. In many cases, retail traders usually rely on indicators like MACD, RSI, moving averages, or whatever. They chase confirmation signals and often fall into FOMO, entering when price looks safe. But here is the hard truth. By the time price looks safe, it's often too late. Institutional traders, smart money, they don't think like that. They only care about three things: liquidity, market structure, and of course, risk. Their goal is to enter positions where most liquidity exists, because this is where they can fill massive orders without causing a big slippage. The difference in mindset is why smart money consistently profits while retail traders keep getting caught on the wrong side of the market. So here is a quick example on how retail traders would act in a certain situation versus what smart money traders are actually waiting for. So we have this bullish move right here on euro dollar. And by the way, we've got a premium Telegram channel where each and every day from Monday to Friday we share trading setups, like I said, on a daily basis on multiple instruments. And what we said about euro dollar is that it's probably not yet ready to move higher, and we're most likely going to see a pullback towards the downside, which could be easily seen on the higher time frame. All right, I've got other videos here on YouTube, some of my most recent videos. I do explain what I'm expecting to see from euro dollar. But anyways, what we have right here is this previous high, right? And price has recently moved above that high, which means we managed to see a breakout. So what retail traders would do in this case is, because we've got, consecutive higher highs and higher lows, and most recently we actually had a breakout of a previous high as well. A lot of retail traders will now be looking to enter a long trade. All right, there's obviously a few scenarios on how to take advantage of such setup. Some of them, depending on if you are a breakout trader, you could be looking for entries right on the breakout, or if you are waiting for a retracement, for a pullback, then what retail traders in this case would do is just wait for that breakout. And since we already have it, we would now wait for price to give us a pullback, so we can then eventually look for buying opportunities. So there are already retail traders who have entered the long trades upon the breakout right here. But let's see what happens next. All right, so I'm gonna move the chart a few candles forward, and you can see we have an immediate reaction after the breakout. So as soon as price enters this zone up here, which is sitting above the previous high, we have an immediate reaction. We have a sharp drop in price. All right, from the levels of around 1.1370, we dropped down to around 1.1330. We're talking about a 40 pips in the matter of literally one 15-minute candle. All right, but now listen, this is most likely the pullback that retail traders are waiting for in order to enter the long positions. Okay, but as you can see, what happens next is price goes back to retest the previous high right here. It then trades sideways for a bit, and shortly after that, we actually have a massive drop to the downside, and price continues breaking below previous lows. So what happens right here? Well, it looks like at first we've got the breakout right here, and this is just so smart money can actually trick retail traders into thinking that price is about to go up. So we not only have stop losses that are sitting above this previous high, okay, but we now also have more orders accumulating because of the breakout. All right, and this is what smart money needs in order to fill their massive positions. So if they want to send price down, first they've got to send the market up to collect all that liquidity sitting above previous high in this case. And then, it's much easier for them to load their positions, because now they have the liquidity to actually, for the market to actually take their orders in. And this is how a lot of retail traders are getting tricked into thinking that the market is about to go in a certain direction, but in fact it happens exactly the opposite. Now let's break down how institutions actually move the market. And this might shock you. Institutions can't enter like you and me. They need to fill huge positions. That means they need your stop losses, your fear, all of your mistakes to be able to create liquidity for themselves. And here is how they do it. They push price into zones where lots of retail traders have placed their stop losses. And this is typically just above a recent high or below a recent low. This is called a stop hunt. And when it happens, most of the traders think that we're actually looking at a breakout. So they enter long just before price drops. But in this case, institutions just finished building their short positions and retail traders is left holding the bag. They also use fake breakouts, sudden spikes in the market, and engineered moves to make you act emotionally. And it works because retail traders are thinking emotionally, while smart money are thinking logically. Here we have another example of how retail traders get tricked into thinking that the market will go in a certain direction, only for the market to reverse right after many of those traders have already entered their positions in the wrong direction. So what we have here is gold on the 1 hour time frame, and as you can see, we've got this support level, not really a level, but more a zone where retail traders are expecting a certain thing to happen. So we've already seen the market reacting to this zone right here, where we've got this bullish impulse. We then have a pullback to that zone, and we have a second reaction, again sending price back to the upside. So the next time the market comes for a retest of this zone, a lot of retail traders will be looking to enter a long position, right? So where would they place their stop loss in that case? Well, the most logical thing is to place your stop loss below this support zone, or basically below the previous market structure. So below this support zone, we've got a massive pool of liquidity because we've got plenty of orders down here. We're talking about stop loss orders. Now what happens though is the next time the price comes back for a retest of this zone, this time we don't see price bouncing off, but instead, as you can see, we have a strong breakout. So now we have breakout retail traders who have entered their short positions right after price closed below this zone. So this liquidity pool down here becomes even stronger because we now not only have stop loss orders sitting below the support zone, but we now also have pending orders of retail traders trying to trade the breakout. So we've got a massive pool of liquidity. And remember, in order for smart money to be able to enter their positions, their massive orders, they need a lot of liquidity. Otherwise, the market is not going to be able to execute that large of a volume for their positions. So this is how they managed to trick retail traders into thinking a certain thing is going to happen. So right after the breakout, a lot of people would think that we're now going to be bearish, so we should start looking for selling opportunities. And even if you're not a breakout trader, well, then in that case, you're most likely waiting for a break in the test setup. And this is exactly what you have right here. So even more short positions are being loaded in the market right now as we speak, because the market is essentially giving you break and retest pattern right here. But here is what happens next. We have a long rejection wick, a bullish momentum to the upside, and the next thing you know is that the market goes back into bullish mode, breaking above previous market structure. All right. So this is what usually happens, and you have to remember that you should always look at the bigger picture, because if you zoom the chart out, you will see that we are actually in a bullish trend. We're talking about a strong long-term bullish trend here on gold. Okay, and just because we have a breakout, it doesn't mean that we're actually going bearish. Okay, so that's where a lot of retail traders got tricked into thinking that price is about to go down, so they started, maybe even switched their bias from going long above the support zone. Now since we have a breakout, they now started going short. All right, and all that smart money did was to wait for price to enter this liquidity pool down here, so they can then enter their massive orders, sending the market back to the upside. This is how you should think and try and notice where are those liquidity pools in order to be trading in the same direction as the smart money traders, or basically the institutions. So how do you stop being the prey and start thinking like smart money? It begins with learning to read liquidity, recognize manipulation, and wait for price to reveal its intention instead of reacting emotionally. And this is exactly what we teach in our smart money trading course. How to spot setups that smart money uses and how to trade with them using a few proven strategies. Because it's not about predicting the market. It's about understanding the game that is being played. And once you shift your mindset, everything changes. You start seeing what is really going on and you stop falling for the traps that kill most traders. If this opened your eyes, make sure to hit the like button and definitely subscribe to this channel because I'm doing videos like this all the time. And I've also got 2 live sessions completely for free here on this YouTube channel every single week. And if you're ready to trade like smart money, make sure to check out the first link in the description below this video. This is where you can learn more about the full smart money course and how you can apply all the techniques in live trading. Trade smart, stay patient, and I'll see you in the next video.